Hello, everybody, and welcome to this week's edition of Your Mortgage Process. I'm your host, Greg Wareham. I have some really great information for you today. We're going to talk a little bit about what's going on in the market and then some other enhancements that we're making to the show. So I just wanted to get into it in reference to what's going on in the marketplace. So interest rates have sort of peaked out, and they're at the highest level they've been since 2007. And one of the things that really led to that is Fitch, that's a rating agency, had downgraded the U.S. government a couple weeks ago. And within days of that, you really started to see the bond market go a little bit crazy, which increased long-term interest rates. Now, the question becomes, is this a short or a long-term change? My opinion on it is when you look at the pattern over the course of the past 12 to 18 months, every time that you've seen a spike, it's been followed by a decline. So I wouldn't rush to panic on anything as a long-term change at this point in time. Now, when you do look at where the 30-year fixed interest rate is today, they've been over 7%, but they're still under the 50-year average, which is closer to 7.75%. That's since 1971. So we're still under the historic average, yet they're higher than what we've seen over the course of the past several weeks. So with that, I also want to talk a little bit about home prices. So the national average home price right now is $410,000. And that's down from where it was in 2022. So in 2022, it was $414,000. So that drop of $4,000, that's a percent that we've seen them drop. So more than anything, the housing market stayed pretty flat. The good news is we haven't seen continued spikes in the market. That seems to have leveled off a little bit. Now, with that, 70% of the people in this country right now that own a home have 50% equity in their property. And what do I mean by that? Is if your house is worth $500,000, that means you owe about $250,000, that difference being the equity that you have of $250,000. And that's a huge number when you think about it. So that's half. If I were to go back 10 years ago, it was nowhere near that number, where you're really looking at probably 10% equity 10 years ago. Now it's 50%. So that's a good thing for anyone that currently owns a home. As we've seen real estate to start to plateau, and we've seen interest rates, for the most part, come up a little bit, but they've been in the 6-7% range now for quite some time. The question that I get frequently is housing affordable? So I got some numbers for you. So when you look at the affordability index, which is it's a percentage of what someone's income is as compared to their mortgage payment. Historically, since 1972, that affordability index has been at 27%. And that means that if you have a $2,700 mortgage per month, you make $10,000 per month, right? That would give us a ratio of 27%. Now, I'm going to go back in time a little bit and tell you where that index has been at different points in time over the past 40 years. In 1981, the affordability index was at 49%. So that means 49% of your income was going towards paying your mortgage. By 1998, that had dropped to 21%. 2006, it had come up a little bit to 32%. 2020, as interest rates really started to plummet, it dropped to 18%. And where we sit now in 2023 is that affordability index is at 29%. So it's just slightly over what the historical average is. So when I ask the question, is housing affordable right now? I just look at the data. And according to the data, a house is as affordable as it's been on average for the past 50 years. So I think that's important information to understand as a consumer. Another question I get all the time is there a recession? I don't know. Were we in a recession? Are we going to go in a recession? I mean, stronger minds than mine are really trying to figure all of this out. But I do want to quote something from the New York Federal Reserve in their probability of a recession. Going into 2024, the New York Federal Reserve is projecting a 70% chance of the country going into a recession. So we'll see if that comes to fruition. Common logic would be if we do go into a recession, that should probably be good for mortgage interest rates. But we'll see where that happens. I'll keep you posted as to anything changing in the marketplace. Another number that I've been keeping an eye on is the Consumer Confidence Index. That's how comfortable are people with the overall economy, with prices, with everything going on in the marketplace. And it's starting to drop a little bit. So when we look at February of 2023, the Consumer Confidence Index was at 67%. Since that time, at the end of June of this year, that had dropped to 64.4%. So you are starting to see that people are getting a little less confident about what's going on in the marketplace. And that's a result of there's still some inflation and prices are a little bit high, interest rates are coming up, and that makes people a little bit concerned, right? You're a little bit weary about what's going on, to include the fact that we could go into recession in 2024. All right, let's talk a little bit about unemployment. So unemployment seems to be this number that just doesn't go up. I mean, when we look at where unemployment was last year, it was at 3.6%, which is an extremely low number for the U.S. economy. The projections as to how things are going to finish in 2023 is just more of the same. They're expecting unemployment to stay at 3.6%. What's so interesting about what's going on is job openings are almost double what the unemployment number is in this country. So as an example, if 5 million people are unemployed right now in this country, it's close to 9 million job openings that we currently have. So there's plenty of jobs out there for anyone that's on unemployment. We can't fill these jobs fast enough. Inflation continues to trend down. There's some different spikes that we're seeing time to time, but inflation certainly is lower than it was this time last year, and that's a great sign. That's a great sign that the Federal Reserve may curtail their increasing to the overnight lending rate, and it's just good for our overall economy, and hopefully that gets these prices down at the grocery store. I mean, we'll see. You know, my feeling on that has always been, once we bake in inflation, and someone who's distributing a product has increased their price to that product, what's their propensity to decrease it if the cost to produce that product actually drops, right? Or do they just look at it as a way to have more margin in their product? So that's going to be interesting to pay attention to in the next 6 to 12 months. When you look at how consumers feel about inflation, I read a great statistic. So if you look at inflation and its importance to the consumer, historically, people are going to go on Google, right? They're going to go and they're going to do different web searches to look at different articles on inflation. Historically, inflation-related searches on Google are in that 20 to 25% range. We saw that number spike to over 90% in 2022. And, you know, that's in part driven by the media and the Fed and everything. All we heard in 2022 is inflation has to get under control. So more than 90% of people that were engaged online were interested in things having to do with inflation. That number's since dropped, where now it's went from over 90% down to 50%. So I think that inflationary catchphrase that we've been hearing, and that inflationary issue, or however you want to categorize it, is starting to trend downward, and it's starting to become less important to the consumer as we've accepted where prices are at and where things are going. So that's kind of what I've seen in the marketplace over the course of the past couple of weeks. So just stay tuned over the next several weeks for different updates in the marketplace and in what's going on. So you know where to tune into that. Just tune into Your Mortgage Process. And speaking of Your Mortgage Process, I want to talk to you about some really exciting things that we have going on. So our website has been up and running for years, but we've made some recent enhancements to it. So now you can get daily what the average 30-year fixed mortgage interest rate is in the market. So if you go to yourmortgageprocess.com, you'll be able to see that number on a daily basis. So you can also on our website track down our first-time homebuyer series. Just navigate and click on it. And I really want to highlight this series because we did this series a few years ago, really before we started doing the podcast. And the original intention was to help a first-time homebuyer understand different phases of the mortgage process and the home buying process. And we interviewed real estate attorneys, real estate agents. There's a lot of myself as well on that. But we didn't want to give you one piece that information dumped on you. We index this into a 15-part series so you can go to what's important to you as a first-time home buyer to get familiar with different phases in the process. And I'd really encourage people to watch that series because it'll really help educate you and lead you down the process. We have our pod link. We're still on Spotify. We're still on Apple and anywhere that you get your podcast that you can access from that site. We're also enhancing with a coaching link. And this coaching link is going to be a combination of myself giving some different coaching in addition to other industry professionals coaching on particular topics. So I think it's a really good place for people to go that are looking to build their knowledge base and to grow over the course of time. So I want to talk a little bit about this new component that we're going to have on our website, and a website that we're actively marketing that's going to include local real estate agents that we work with to help the consumer have a path of assistance to get with the right real estate agent. So if you have questions about that, you can reach out to me directly at greg@yourmortgageprocess.com, or you can call me at 385-519-HOME so we can have a conversation to see whether or not it's the right fit to have you on the platform. But I'd appreciate your phone call, and let's try to work through it together. So I appreciate all the time that people spend listening to the podcast and watching our YouTube series. I get a lot of great feedback, and it means a lot to me, that feedback. Something else that would mean a lot to me is if you took the time to subscribe to our YouTube channel, you hit like on a video. So I've gotten some really good feedback from people that are loyal to the show, and we do appreciate it. And if you have any suggestions about things that you'd like to hear or you'd like to discuss, just reach out to us, and we'll certainly take it under advisement and see if we can incorporate something in our show. And please, again, if you need anything, just reach out to me, greg@yourmortgageprocess.com. The other thing that we're going to move to in September is we're going to go to a weekly interactive stream. So I appreciate everyone that spent the time kind of listening to me and listening to guests. And we kind of got this one-way radio, right? You hear what I say, but you really can't ask questions, except for some episodes we do where Nick is fielding those questions from the audience. I want to do something that's significantly more interactive. And I want to hear what you have to say. I want to hear what you have to say about what you want to see on our show. But just as importantly, I want to be able to answer the questions that you have about the mortgage industry, about the economy, about things that are driving long and short-term interest rates, and have open discussions. So you're going to see a link go out to everyone for a mortgage live stream that we're going to do, or really I should say financial live stream that we're going to do. And we're looking forward to taking your questions in real time. The other thing that you can get ready for going into the back end of this year is we're going to do another live seminar. I know the last one that we had 300 people at it. We're hoping to have 500 people at this one. And it'll be us talking about the economy, the market, wealth building, and all those things that are important to you to build your business and to build long-term wealth. So I'm really excited about that. Those of you that know me personally know that I'm a ham, and I love to be on stage, and I love to be able to give information to everyone to try to help enhance what you're doing in your business, what you're doing with your clients, and what you're doing personally. So if you have any questions, you want to reach out to me directly. I'm always open for you, for people looking to purchase a home, to help them with the mortgage process. Thank you so much for your continued support and listening to the show. It means a lot to us, and I hope you get a lot out of it. So thanks, guys. Look forward to catching up with you next week. Thank you for tuning in to this week's edition of Your Mortgage Process, hosted by Greg Wareham, produced by Greg Wareham and Nick Pavese at The Social Rift, and executively produced by The Social Rift. Thank you again for tuning in, and we look forward to catching up with you next week.